Welcome to Talk Tickers, where we break down the latest earnings calls for experienced investors. Today, we are digging into Grupo Cibest's third quarter 2025 results. And wow, they just posted a monster quarter that sent the stock to new highs. So, what exactly is going on here? Let's get into it.
All right, first things first, Grupo Cibest delivered some powerful numbers. The big one everyone is talking about, their GAAP earnings per share, or EPS, which came in at a solid $2.18.
And let's be clear, this wasn't just a slight beat. No, this was a decisive 21% beat versus the Wall Street consensus. They absolutely crushed expectations.
And you know what? The market definitely took notice. The stock shot up nearly 7% over just 2 days, closing at a brand new 52-week high. So yeah, let's dive into what made this quarter so special.
Okay, so here's our game plan. We'll start with that headline beat. Then we're going to look under the hood to see what's really driving things. From there, we'll unpack 2 key strategic stories, check out what management is saying about the future, and then we'll wrap it all up with our key takeaways.
All right, Section 1. Look, the most important thing to understand is that this wasn't just another good quarter. This really feels like a fundamental step change in the company's profitability.
And, the results were just strong across the board. You've got revenue up 20%, net income jumping by more than 42%, but the real kicker, a quarterly return on equity hitting over 20%. That is an impressive number, and it's basically validation that management's strategy is really working.
So, the natural question is, right, what exactly powered this massive beat? Well, it wasn't some one-off event or accounting trick. It really came down to just high-quality operational execution. They are firing on all cylinders.
So let's peel back the onion a bit and look behind the numbers. This is what I like to call the engine room of the quarter.
Okay, now this slide is absolutely key. It breaks down the 3 core drivers. First, their cost of risk. The money they have to set aside for loans that might go bad. Well, that dropped by a third year over year. That is huge. Second, they kept a tight lid on spending, getting their efficiency ratio down below 50%. And third, their core lending margins stayed incredibly resilient. And you don't have to take my word for it. This lines up perfectly with what the CEO, Juan Carlos Mora, said on the call. He framed this whole quarter as one of strong execution, basically signaling that this is sustainable, not just a fluke. Now let's zoom out a bit. Beyond the fantastic quarterly numbers, there are actually 2 major strategic themes playing out right now that are completely reshaping the investment case for Grupo Cibest.
First up is their digital bank, Nequi. For a long time, this was just a fast-growing project that burned a ton of cash. Well, not anymore. It just turned profitable. This is a massive milestone, and it completely changes Nequi from just a growth story into a real value driver for the company.
The second big story here is all about capital return. The company is in the middle of a huge 1.35 trillion peso share buyback. And as you can see, they're not messing around. They've already completed more than a quarter of the program.
And this isn't just a one-time thing to juice the stock. It's a direct result of a major corporate reorganization they did. By creating a new holding company structure, they've basically unlocked powerful new tools to send capital back to shareholders. This is a structural shift.
So, with all that in mind, what does the road ahead look like? Well, management gave some pretty clear guidance that suggests they think this new, higher level of profitability is here to stay.
They're guiding for a full-year return on equity of around 17% for 2025, and they expect to keep it right in that 16 to 17% range for 2026. That's a strong signal of confidence that this new level of return is totally sustainable. Now, they're also being realistic. They do expect that super low cost of risk to normalize a bit higher next year. But they think healthy loan growth and those stable margins we talked about will be more than enough to offset it, letting them hit that high ROE target.
Okay, so let's put it all together. What's the big takeaway for us as investors? What's the thesis here?
For us, the main takeaway is that the entire story around this stock has shifted. It's no longer just a simple bet on an economic recovery. No, this is starting to look and feel like a high-quality, long-term compounder.
So here's the play. The fundamentals are, without a doubt, very strong. But the stock has had a massive run this year. We're talking nearly 100%. So chasing it up here at 52-week highs is probably not the smartest move. We think the real trade is to be patient. Wait for some of that inevitable macro volatility to create better entry points, and in the meantime, keep a close eye on those 2 key catalysts, the buyback execution and Nequi's path to profitability.
And that's our analysis of Grupo Cibest's incredible quarter. This has been Talk Tickers. This is not financial advice.